Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, September 29th, 2023. So, I'm doing this video about an hour before the close, and this close may be interesting. This is a pretty high stakes close here for the Bulls. There's a level on SPX that has to hold, in my opinion, and it's 43.10 on the SPX. So we'll see what they can do here in the next hour or so. They seem to have a little bit of energy, a little bit of a short squeeze run in here. But I do kind of want to round back to last week's video where we were talking about the markets now having kind of a completely different structure than we've seen before, at least since March. So I kind of just rely on my labels here to tell me what to do, what to think. And, you know, the labels here are completely red across the board on SPY. Not only that, but it would be different if they were red and the indicator was down here somewhere, right? Kind of closer to the floor. But when the indicator is still very high up, especially on the weekly chart, you can see here the arrow is actually flashing on and off. That leaves a lot of room to come down, right? So they are trying to put in a bottom. It seems that way, right? We're seeing an attempt at a bottom in bonds. We're seeing an attempt at a top in the dollar. We're seeing an attempt at a bottoming structure here. Kind of ugly, very sloppy, very messy on SPY as well. But I can't quite call it that yet because the way that I'm looking at it is there's going to be a resistance, right? It's going to be the open gap as well as the daily 21, especially because now you have a red trend. So that green line is resistance and a place to short if you have signals. And then this magenta red line down here, which I'm tracing over, is support. That support level comes in at 419. Very big support. And you see how we're kind of trapped in the middle here? Like we're 428, it's $10, it's $9 to the downside, $9 to the upside kind of thing. So we're almost exactly as we trade in between the levels. And so you have a little bit of a monkey in the middle kind of market, right? Where you're not quite at resistance to short, although the market would justify a short more than a long. You're not quite at support to buy, at least on a daily time frame. So what do you do? What do you do in that situation? Well, what you do is you have to continue to shrink your time frames, right? You have to continue to shrink your time frames. I think this market is really best appreciated and traded off a 1 minute, 5 minute, and 15-minute chart. And basically, you just treat the 15-minute chart like it's the daily. You treat the 5-minute like it's the hourly, and you treat the 1 minute like it's the 15. And then it just becomes standard swing trading at that point, just with a lot faster occurrences and information because the candles are printing so much faster, right? More than one a day. So I would suggest maybe if you missed last Friday's video, go back and catch that one. I think we covered what we covered here in a little bit more detail. There's not much more I can add to the commentary this week because we're just basically seeing it play out from last Friday's video, and the signals really have only progressed, to the downside, even further. So know your levels, right? I think the level here, there's 437, which would be a great level to short. I'm not entirely sure we have enough energy to get there, but it would be a great level to short. There's 432 as resistance. And then 419 is going to be your support level. As long as we're kind of in this box here, we're kind of right in the middle of this box, I think you may want to use smaller time frames, day trade a little bit more, and wait for things to clarify with a bias to the downside on this market, right? At least on a daily chart. So I'll go ahead and leave it there because not much has really changed week over week. You will need to see next week bonds. So I'm following the ZB, and there is a potential that it's trying to put in a reversal candle as of yesterday, but we need to see follow through. So ZB, SPY, and the dollar are going to be the three most important things to watch next week. Understand how all three of these things affect each other, and if you start to see synchronicity between them, meaning that the dollar's going up, bonds are going down, that means stocks will go down. That's an easy short. If you start to see bonds rally, dollar drop, then it becomes a relatively easy day trade long for the index. So that's how I'm going to approach it next week. Still staying nimble and just appreciating the small time frames is where the clarity is to be found. All right, guys, that's my time. Hope you have a great rest of your Friday. Leave us a like before you go somewhere else on the YouTube. It certainly does help us out with the algorithm. and we'll catch you next Friday for the next video. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.